Okay, so let's start. Good evening, everyone. So I hope you all have a good dinner and it's a Saturday night lah. So welcome to the first live webinar of Nimbus Capital. So so you all probably know me from the Stock Master Group, the SGS Master Group. So I am Zor. My full name is Zor. Like you can call me Zor, and I'm the admin for this group. So you'll probably see me posting a lot of stuff. Mainly trade analysis on this Facebook group lah. So I recently set up this Patreon page which I am doing this particular live webinar for. So this live webinar, right? It will be happening on every Saturday of every week, unless I have something going on or what. Then I will probably not do it live, but there will still be a recording which I will upload it probably on Monday lah. So do be reminded that if there is no live meeting, there will probably be a recording that is uploaded. Okay, and how this meeting will go about is I will usually provide update on the market for the particular week. Then I will go through some of the trade setup that I shared during in my Facebook, and I will also let you know some of the trade that I personally took for the week lah, and also which are the trade that I actually take profit, or I'm still in the trade, or which are the trade that was being stopped out. So just to share with you all, to be fair, because this Patreon is on a subscription base, so I actually have three tier. So this one most of you should know already. So for the starter tier is $10 per month lah, which you all will have access to my screener. So my screener looks something like this, and so for the $10, you all will have just access to the screener only. But for those who have $20, who subscribe to the $20 per month, right? You all will have access to not only the screener but also the analysis that I posted, which you should see some of them on the Facebook page ready. So I will have like Apple DC, Semco Industries, Venture, Maple Law. So all these kind of analysis that you see. For example, just to show you, all the analysis, they will probably have a support level, TP level, and a stop loss level. So you all can make your trade much more easier lah. It's easier for you to enter your trade lah. Okay. But one thing to take note is that all these trades, right? All these analysis, they are not trade call. I do not take all of them. I only take some of them. So it is still based on your own due diligence whether you want to take or not, take the trade or not. Then the next one is the highest tier, which is $40 per month. So this video, right, after this free period is over at the end of November, only the $40 per month will have access to this video lah, because it does take quite a bit of time and it does take quite a bit of work. So only those who subscribe to the $40 per month will have this video. But from now until the end of November, right, this will be made available to everyone. So you all can tune in. If you find this helpful, then you all can probably see whether you wish to subscribe to the $40 per month or not. And perhaps maybe in the future, I'll be adding more and more stuff to each of the tier lah. So right now, these are the base minimum that I have set up for now. So for the $40 tier, right, you will be also able to see my investing note portfolio. So this is the portfolio I have. You can see here. Nimbus Capital. So within this portfolio, I have all the trades that I have currently open, currently closed, and what are the position that I'm holding right now. So, and you'll also notice that all these trades are stuff that I actually posted on the Facebook itself lah. So some of the trades I do take myself, and I do hold on to them. I follow all the stop loss and TP level that I mentioned in my analysis post. Okay. So these are mainly the basic stuff. So let's go through the today live webinar proper. So this will be the usual flow lah. First, I will go through the STI market. So what you will see here, this is the SGX, the fund flow analysis. So you can see here, left side and right side. Left side is the weekly, right side is the cumulative. The blue color line are the institutional fund. It means how much of the smart money, the banking, the investment funds are going into the market. whereas the red color is referring to retail funds. Retail funds mean retail trader like us lah. So so you can see both on a weekly basis and a cumulative basis. So these two graph, right? This is for SGX in general, mainly all the companies, all the counters that are listed on SGX itself lah. So you can see that for the fund flow analysis, right? Ever since the start of this year, 2020, what you'll notice is all the institutional funds, right? You can see that they are on the negative side, which means that most likely the stock market is going to be going down for the first half of the year. Actually, until right now, September, going October already, right? You can see that the institutional funds, they are actually on the negative side. Whereas the retail funds, they have been busy buying the market. But however, if you look at Singapore market in general, right, it is not going up. It is still very low. For the STI, the Straits Time Index, right, we are still below like 3,000 points like that. So you can see that the institutional fund are very important in allowing the market to grow up, because it is only the institutional fund that can push the market. There is no point when all the retailers are buying, but there is no institutional participation in the market. So actually this data, right, you can get it from SGX website itself, but they will give you a raw data in terms of numbers. So what I actually did is that I plot this number out on an Excel sheet and I draw them into a graph. So you can actually see my raw data, right? I manually go into the SGS website, I pull the data out, I plot this, and I managed to get this chart lah. So it does require quite a bit of manual work, because you can't. I have researched and I don't think there's anywhere on the website that plot this in a chart pattern for you lah. But if you all do know of any website that does this, right, do let me know, because it will save a lot of my work. And also, these data are released on a weekly basis. SGX will release the data for the previous week. So right now, I do not have any data for this particular week yet. They release the data every Monday. So only on Monday, I will be able to update the fund flow for this particular week lah. So here you can see this is a weekly movement. And on the right side, what you see here is the cumulative, meaning all the every week we have a number and I'll add them up together lah. So this is the cumulative. So you can see that the fund flow for institution, right, smart money, right, they have been going down and down and down. So because of this alone, right, I feel that Singapore market, even in the near future, right, is not going to recover anytime soon lah. It will probably be stuck there for quite some time. Later I will go through the STI, so STI chart, and you'll be able to see lah. Whereas you can see that the retailer fund, they are going up and up and up, but there is no movement from the market itself lah. So we do need the institutional fund to work. So until I see this blue line turns upward, right, only then I will be more optimistic in the Singapore market lah. Okay, so I'll be presenting this chart at the start of every live session, so you all will be able to sort of tell how the market is doing for that particular week. And this particular chart, right, it will be available after November. After this free period is over, it will be available to the pro and masters lah. So you will have access to the SGS fund flow. If for the master, you have access to the SGS fund flow also. And at the bottom, what you see is you have the straight time index fund flow. So the difference here is, for the top part, it is for every counter listed on SGX. But for the straight time index fund flow, it is only for the STI constituent. STI constituent is referring to the 30 companies that made up the STI constituent. So you have counters like your three banks, DBS, UOB, OCBC, you have your Jardines, you have your Mapletree, you have your Keppel, SIA, SPH. So all these counters these are the fund flow for just the STI constituent. So what you notice about the fund flow for STI, right? The data only start from February 17. This is because SGS only start releasing the data at around February like that. So this is as far as the data goes. And what you will see also is that it sort of coincide with the overall fund flow, in the sense that the the retail fund flow is still mostly on the negative side. Sorry, the institutional is still mostly on the negative side, but the retail is on the positive side. So we need the institutional, the blue line, to go into the positive zone to see any kind of rally in Singapore markets lah. So if you look at the cumulative, you can also see that the blue color is going downwards. So we do require this institutional fund flow to go upward lah, before I see any kind of I will expect any kind of rally in the Singapore market. Okay, so with this done, let's go through some of the stock counters that we have. So let's come to this. Let me see. Okay, so STI. So you can see here the STI itself, right? The fund flow itself, you can see ever since from February 2020 onwards, we have been in a declining trend, which you can clearly see from the fund flow itself, that from this point onwards, you see that the institutional fund flow remains at the negative side. It is from somewhere around here. 10th of February, the institutional funds start to trend downwards, which is why you start to see that. Sorry, where's my chart go? Yeah, so from this point onward, you can see STI sort of crash lah, mainly because all the institution funds are selling off. So currently STI as it is right now, right, what you can see is the price it has been in a sideways. We have been in this trend for quite some time already. This particular, we don't let's not consider this part here, because this is more like a fake breakout. But after this sort of like a fake breakout, right, price has been in this region for quite some time. Okay, so even right now, price have hit a resistance somewhere here. So previously this level, it was like a support, then it became a resistance, and now it is resisted again. So most likely it is going to go back down again. So what you can see here is also that we have a low, then there's a slightly lower low. Maybe this might go even lower. So in the coming few weeks, I don't expect any kind of I don't expect any kind of positive movement from STI lah. So I will not be bullish on STI unless I can see that price can break out above this resistance, and it can sort of stay above 2600 level. Okay, so so for this fact alone, right, I am not interested in trading any counter that is part of the STI constituent. Mainly, I'm not looking to trade things like DBS, UOB, OCBC, CapitaLand, Mapletree, all these big counters that are part of the STI, right? I am not looking to trade at all. So the most money that you can make in Singapore market are all those mid cap and small cap, those penny counters, those below $10, those mid cap counter like Hi-P, AEM, UMS, CMSC, Gold Mine, all these kind of small cap counters. So you tend to see me pushing for small counter a lot, because they are somewhat detached from the STI market itself. Okay, so now that we have gone through the STI, right, let's quickly go through the three banks also, because they made up a huge part of the STI constituent itself. So let's look at DBS. Okay, so when you look at DBS, you can clearly see a few things. Number one, let's look at the resistance here. We have clearly one resistance forming here, here, and here. And now that price has hit the resistance, right, it's starting to turn back already. So if I were to sort of like draw a trend line, if I were to draw a trend line here, you can sort of start to see price will start to come back down. So the next support level is around this particular level here, around this level here, 20.5. So you will expect price to probably ding down here for quite some time and then come back down to 20.05. But of course, this doesn't mean that you should go and short DBS or stuff like that, mainly because in terms of the finance charges and the short holding charges, things like that, right? Shorting such a big cap counter is not really worth it. Also because when price come down, right, it doesn't come down in a very fast fashion also. It will probably come down like this, very slow lah. So just know that the chances of it coming down is much higher than it breaking the resistance lah. So even if it does manage to break the resistance, you will hit another resistance level around here, around $22 here. So let's say if it goes up, right, maybe it will hit the resistance here, and then it will come back, it will retrace a bit, and it might come back down, again lah. So it is DBS look much more bearish rather than bullish, mainly because we are hitting all the resistance level already, and also because we don't see any participation from institutional fund yet. So only when this start to go up, then I will be more willing to say that, okay, maybe DBS can break the resistance. But as of right now, I don't feel that way. So let's look at UOB. So UOB also somewhat the same thing. In fact, UOB is much more worse than DBS, mainly because at least DBS is able to go from the support right here at 19.6 all the way to the resistance at 22 like that. Whereas UOB is like somewhat stuck in a horizontal line like that. So it is kind of stuck here between the support level. Okay, and the resistance level somewhere here. So the so-called the range that it is being stuck, right, is quite tight and you can't play this range at all. So if you bought UOB and expecting it to go up, right, you are probably stuck here for quite some time. And if you see that price tend to go very choppy manner, right, try not to buy into this kind of counter, because most likely you are going to get stuck. Actually, OCBC also display the same thing. The bottom end, the support and the resistance, right, they are extremely close by, and most likely they are going to get stuck here also. And also because of the fact that DBS is hitting resistance and is going to most likely going to hit back down, right, we can sort of give a reasonable prediction that coming next week, STI is most likely going to go down rather than it is going to go up. Okay. So now that we have done with the bank, let's talk about the two telcos, because we have iPhone 12 coming out, we have all this 5G that's going, and but the thing is, looking at telcos, right? I'm not, you probably seen me post on Facebook that Singtel is not going to do well, and it will still continue to go down, mainly because of one very simple fact, that it is still in a downtrend. It has been in a downtrend for very long already, and it has yet to show any kind of uptrend yet. So there is no point in trying to bottom pick a counter and then using reasons like 5G coming out, this coming out, that coming out. But the thing is, how much is 5G able to boost the revenue and profit of counters such as Singtel and StarHub? Because all these we don't really know also, and until we can see a reversal in the trend itself, right, I do not wish to bottom pick this counter. So let's say for example, let me change to weekly chart. Okay, so this is the weekly chart. You can see that we have been in a downtrend, and of course we are very near the all-time low here lah. So for those who are looking to bottom pick here, right, we are not at the true bottom yet. Singtel can probably go down and hit around $2 level like that, or worse still, it can even go below $2 and go all the way down lah. So there's a high chance that the $2 can be broken lah. So before I am willing to long, right, what I want to see is at least I want Singtel to show a higher low first, until I see this kind of higher low, and then I will buy, and maybe by then Singtel will be able to do a reversal, a true reversal lah. So until I see this kind of higher low, right, I will not be wanting to buy into Singtel first. So the thing is, if you bottom pick this counter, right, at most you will get extra profit somewhere here. You will get extra profit somewhere here, but the risk is not worth it. It is better to let this go and wait for this to happen, then you buy in, rather than trying to sort of take this risk and predict, and then end up you get a very huge loss lah. So that's my point of view for Singtel. And same thing with StarHub also. You can see that StarHub is actually in a very long-term downtrend also, and we can see a support around here lah. So most likely StarHub is going down to 1.09, and if things get even worse, right, it will go down below below $1 like that. So even for StarHub, same thing. I will want to at least wait for a lower high, maybe something like this to happen. Then I will buy the breakout here. So I am willing to let go this portion of the price move. This portion of the price move, I don't mind. I let it go, but at least I have a confirmation that it is an uptrend now. So if you try to bottom pick, right, what you are actually trying to do is you are trying to get this much of profit with a very high risk that it can go further down. So it is not really worth it. So summary, Singtel and StarHub, try to stay away regardless of whatever iPhone, whatever 5G, stay away for now until you see a higher low. Okay, so with that said, for the STI, right, we have a few interesting things that happened last week. One of it is you can see Wilmar. Wilmar dropped a lot. I think I Wilmar right here. Okay, yes, Wilmar. So what you have here is that you can see that Wilmar on Thursday dropped extremely bad, and then it sort of stabilized here lah. So I would not jump onto the board and sort of straight away say that this is a bearish candle. Okay, this is definitely a bearish candle, but if you look at the bigger picture, right, it is not really bearish yet, because on a bigger scale, we have sort of like a resistance that is here for quite some time, since 2013 like that, resisted. But now within 2020, right, Wilmar managed to break through the resistance, and it is still staying above the resistance, which is above $4 lah, 4.1 like that. So Wilmar is still above this previously resistant. Now it has become a support like that. So until this level is like broken down, right, I don't expect Wilmar to be like extremely bearish. So please do not go and short just because you see that very big counter lah. Because we have a very strong support here, and what you can see is that there is a lot of interest in this area, this box zone, right? A lot of people are interested in buying in this area. So what you will expect going forward for Wilmar, right? It will most likely go sideways. It can ding down between 4.1 and 4.6. It will go sideways for quite some time until probably it break out above. So if you truly want to play Wilmar, try to buy Wilmar towards the bottom of this range. So probably around 4.2, or maybe 4.1 might be hard for you to catch, but 4.2, 4.3 is a good level to buy. And now that it's going up, right? Don't be like FOMO and try to chase it. It will go sideways for quite some time, and it will definitely meet your buy order around 4.2, 4.3 lah. So try to be patient with this counter. It is not going to immediately shoot up, mainly because there's a lot of volume in this area. There's a lot of volume in this zone, and it will take Wilmar quite some time for it to exhaust all the volume before it can go upward lah. Okay, the next one is, of course, Capital DC REITs. Capital DC REIT now is part of the STI index already. So you can see that on Friday, there is a huge volume coming in, mainly because of that. And what you notice, ironically, is also this candle here. It seems like a very bearish candle, like a pin bar, like a shooting star, or a inverse hammer, or whatever you call it lah. So what you will see is as if Capital DC REITs try to rally upward, but it got resisted at this resistance level at 3.06, and it seems like we are hitting the top already lah. We are hitting the top like that. We are going to come down like this. But the thing is that this candle, right, it is not actually a very bearish candle. I would not short this at all. I will not try to short this candle, and mainly because this huge volume, right? Let's go deeper. Let's go into 5 minutes. So what you can see is this huge volume actually came at the last closing auction here. last closing auction here, you have the huge surge of volume. So actually all these candles here, they don't really have much volume associated with them. So because of this, right, the huge volume came in around $3, 3.05 like that lah. Okay, so the huge volume came in around 3.05 like that. So there isn't any much selling happening here. Rather, there seems like a lot of buying happening around 3.05. Okay, so what can happen is, even though the candle seems bearish, it is not exactly bearish. Price can go sideways a bit and it can start to rally upward also. So if you are looking to play, Capital DC, go and look at my Patreon analysis. Let me just bring it up. Capital DC. And you can see all the possible entry levels that I gave here. So there are 3 levels. You can buy in at 3.04, 2.95, and 2.9. So there are 3 levels mainly because price can definitely go back down a bit. It will not rally immediately lah. There's a chance that it can go back down. So instead of buying everything at the current price, which is around 3.04, right, you might want to split your entry into 2 or 3 different price lah, so that if it does go back down, right, your average price is much lower. Of course, if you are using this kind of strategy, right, you do need to ensure that your brokerage commission isn't too high lah. If your brokerage commission is too high, right, then it is not worth it for you. So if your commission is around 25, if your minimum commission is $25, right, you, instead of buying in straight or splitting, you probably want to wait for it to come to $3 and then buy at $3 lah. Okay, so if you are looking to take this trade, do take note of the stop loss. All the stop loss level given in my analysis, they are very, very crucial. They are chosen at a very strategic level. If you try to shift them to meet your own trading style, right, what you will realize is that you might end up getting stopped out, or you might end up taking way too much risk. So try not to shift the stop loss. What you can do is you can buy lesser loss, or you can wait for the entry to come to you. Okay, so Kim Lee. Okay, so now after Kim Lee, let's talk about all the medical counters, because medical counter seems to be doing quite, there seems to be some movement in this week also lah. So firstly, let's talk about Riverstone. Where's Riverstone? Okay, never mind. Since we are at Top Glove, let's talk about Top Glove. Okay, so Top Glove, it is currently at the resistance level already. For those who don't know about Top Glove, right? Currently they have stock split or bonus issue. I think it's a split. Yeah, they split 3 for 1 lah. So that's why it is back at $3 level. Previously, I believe it was at like $8 or $9 level like that. And what you can see is that we are sort of flirting with the resistance level. But if you look at the volume, the volume at the resistance level isn't a lot. And it can be also that it can, so let's not predict anything. There are 2 things that can happen. One thing is that it can shoot up. If it shoot up, right, you can definitely buy the breakout lah. So when you are looking to buy breakout, right, you don't immediately go and buy like around 3.2 like that. Let's say price go up 3.2, you go and buy, then it will come down, then you will gonna a fake breakout lah. So try to give yourself some buffer, probably buy around 3.3 or maybe around close to 3.3 like that. Around 3.3 like that shoot up, then make sure that there's a huge volume that accompany this price breakout also lah. Then it is truly a breakout lah. So if you want to sort of look at what are the true breakout, right, you can actually see something like this. Let me play this. Okay, so I have a resistance, I have a breakout. So when the price breakout, there is a huge volume that accompanies it. So this is the kind of signal that you want to look for when you are looking for a breakout. Okay, so look for that kind of breakout and you can buy the breakout. If it doesn't break out, right, most likely it will probably retrace back to around 2.5 level. You'll probably come back down. It will probably come back down to 2.5 level around here like that. So try not to chase it. Try not to chase just because it hit like 3.1, 3.2 a bit, then you go in, because most likely it will be a fake breakout and you'll get stuck at the top lah. So for a chart like this, right, it is better to wait for price to come back so that you can have a lesser risk. And let's say if you are waiting for the price to come back, but sway, you during the time which you are busy, price shoot up a lot and you are unable to catch it, right? It's okay, just let the stock go. You don't need to chase every single stock that is running up. If you remember, in my Facebook group, I actually did not get this entire trend of top glove, mainly because whenever I want to buy, it keep going up and I just simply decide not to chase it. And when you don't chase a moving counter, right, it doesn't mean that you are going to be in a huge disadvantage, like, mainly because there are so many other counters that you can play also. So that's top glove. Next, let's look at Riverstone. Okay, so this is Riverstone. So what you can see for Riverstone is also about essentially the same. We are hitting the resistance level here. So most likely it can also ding dong a bit before it start to come back down. Like, it can ding dong a bit, it can start to come back down. The difference between top glove and Riverstone is that actually top glove is sort of at the all-time high resistance level lah. Once it break out, right, it can go much higher. Whereas for Riverstone, the all-time high is still far off. So if, let's say, price break through this resistance, there's another resistance up there lah. So same thing with the top glove. If it does break out, you can buy the breakout. You buy this breakout, or if not, you can choose not to buy. Wait for the retrace. Wait for the retrace back to around 3.4 level, and then you can buy at 3.4 level. So when price start to go back up again, right, at least you can TP a bit at 4 and then leave the rest. You can keep it until like 4.7, 4.8 like that. Okay, so these are the kind of strategy that I used to do lah. But one thing you should never do is, of course, this is a very strong uptrend counter. So you should never go and short here because it is at the resistance. For the simple fact that it is an uptrend counter, because the trend is up, right? Most likely is that buyers are going to come in anywhere lah. So you don't know when it can suddenly reverse like that, and you don't want to be caught in your pants lah. It's not worth to short this kind of very strong uptrend counter. Okay, and the other two counters are MedTech and UG Healthcare. Let's look at MedTech. MedTech has a good run last week. Where's my MedTech? Sorry, let me look for MedTech. Okay, MedTech. So MedTech has a very good run last week, but the thing is, it is hitting the resistance and it is starting to come back down. So this 1.1 to 1.2, this level here is actually a good congestion level. Price can ding down here for a while. So you can, if you are looking to buy, right, you can actually look to buy around 1.2. And of course, your stop loss should be below the support, probably around 90 cents like that. So if you look at it, 1.2 to 90 cents is actually quite a wide stop loss, 25% wide. So if you feel that you cannot take this kind of very wide stop loss, right, then it's very simple. You simply do not play this trade, because if your account is not big enough to take this kind of stop loss, right, then it is too risky for you lah. Or the other way is that you can just place a buy order around 1.5 like that. So sometimes price can hit the support for a while and go immediately back up. So if this kind of scenario happen, you can at least get some entry in, and your stop loss is very nearby. You'll be taking very less risk lah. Okay, so for this, we have a resistance at 1.6. So if you are looking to buy, 1.1, 1.2 are a good level to buy lah. 1.3, at least, I mean, it's a little bit high, but you can afford to wait lower. And of course, the last one is UG Healthcare. Is it this? Where's my UG Healthcare? Okay, UG Healthcare. Okay, UG Healthcare, the price chart is looking something like this, mainly because it gave out bonus share, or is it bonus share or is it split? Yeah, it also did a stock split, but after it did a stock split, right, it changes its stock symbol lah, sort of it changes its name lah, something like Vicom, like the Vicom changes its stock symbol also, so it became like an entirely new stock like that lah. Okay, so same thing. What you can see here is that it is in a somewhat very tight range. The support is at 0.95 to the resistance at 1.08. So even if you buy here and you try to sell here, right, it's not really worth it also. So what I would suggest if you are looking to go UG Healthcare is wait for the breakout. Wait for the breakout. Or if when it come down to 0.95, you can buy a bit. Then when it break out, you can buy a bit more. So your total average price is much lower lah. So for UG Healthcare, I will wait for the breakout. Okay, so these are some of the counter that have some activity last week. So I'll go through two counters that I have recommended in my Facebook group. So if you have these two counter, right, and you are still holding, you don't know what to do, you're probably in the profit already lah, but you are not sure what to do, right? Here are some advice for you lah. And these two counters are Franken and High P. So let's look at High P first. Okay, so High P, right? My buy call came around here, this candle, around 1.13 like that. I personally got High P at 1.13. So currently we have rallied a bit. Price have gone up about, let me get the price have gone up about 13% already, and we are hitting the resistance level somewhere here, 1.27 like that. So if you are already in the profit, you don't know what to do, right? What I can recommend is you can TP probably 50% or 60% of it, depending on how big your lot sizing are. If you are buying like maybe 5,000 shares, 6,000 shares, then probably no lah. But if you have like 15,000 shares, 20,000 shares, right, you can TP probably 50% of it, and you shift your stop loss to your entry price. So if price come back down, right, at least you break even with the remaining lah, and you have some money in your pocket. So what, because the thing is we don't know price is going to come down or continue to go up. So if it come down, right, at least you got some money in your pocket, and your remaining shares, right, you break even, you don't incur any loss. But let's say if price goes up and hit the other resistance level at 1.4, right, you are still able to sort of ride the trend, ride the second part of the trend. So I personally taken 60% of my profit already. I'm still holding the other 30% to ride this trend up lah. Okay, let's look at Franken. Okay, Franken also same thing. Franken buy call came in around this candle here. I personally got it at 9.8 like that. I'm not sure what price you all got it. So we have come to the resistance level about 1.08, 1.1 like that. Like it briefly touches 1.1, and price now starting to go down like that. So this price action, right? If you compare to High P, this one slightly look more bearish. So most likely it's going to come back down. But the thing is that this support should hold lah. So this support should hold. So for those that have not gotten into this trade, for those that missed the trade call here, right, you can look to enter. Those who are holding, right, you might want to TP most of it, and if it does come back down, you can rebuy again lah. Or if you want to hold all the way, also up to you lah. But I personally have TP about 50% of it already, so that if it does come back down, I have some money in my pocket and I can buy it back at the same price again lah. But the thing is, because the trend is very good, right? Eventually, I'm looking to buy around lower price here, and I want this big trend lah. I want the price to go to 1.25 lah. I mean, when price go to 1.25, I will be able to, I will be still in the trade. So whenever price hit 1.08, 1.1, right, I am not going to TP everything that I have. I'm probably going to TP like maybe 60%, 70%. I will still hold on to the rest. Each time price come back down, I will buy a bit some more at the bottom. So as long as you follow the stop loss that I have given, I'm not sure where is it, I forgot already. I think it should be 0.85 like that, around this level. Or maybe it's slightly higher. You can go back and check my Facebook. So these are my recommended actions for high P. And some of the analysis that I made last week, I personally have entered. Let me show you. I personally have entered Aspen. I have Kimley. I have Union Gas. So of all the stuff that I went through, so of all the analysis that I posted, of all the analysis here, I have entered Aspen. I have entered Union Gas lah. Sunningdale Tech I have already. CMNC Gold Mine I haven't entered yet, but I'm still looking to see. So I entered Union Gas. So let's look at Union Gas. Okay, there's a reason why I enter Union Gas, mainly because if you look at this, right, this is a very bullish chart. This is a very bullish chart. There is no resistance previously at all. There's nothing here. So it is a very bullish chart. And secondly, what you can see is that the volume behind all these green candles is quite high, meaning there's a lot of buying interest coming in. So now price rally upward, right? We break through this resistance and there is price retrace a bit, but you don't really have to worry because it is not like immediately coming down with a very big rate volume. It is just retracing slowly. So you just let it be. I think my stop loss that I given was 0.440. So most likely, right, price will just ding dong here a bit before it probably does another rally lah. So this is the trade that I'm looking at. But of course, if price does go back and hit your stop loss, right, do not change your stop loss or do not push your stop loss further down. Just take the loss and just move forward. Mainly because stop loss are there for a reason. If price hit the stop loss, right, meaning the trade is no longer valid. The reason why I entered the trade is already gone. It's not valid already. So you should not be in the trade already. If you are following my analysis and if you price hit the stop loss, right, please do yourself a big favor by just adhering to your stop loss. So even before you enter, you should have calculated how much you are, because the stop loss is given to you, right? You should be able to calculate how much you are willing to lose and you buy the corresponding number of shares so that when price does hit the stop loss, right, you don't lose too much. So that's for Union Gas. And also let's quickly look at Kimley also. Kimley is something that I have entered quite some time back and I am also still in the trade. So why Kimley? Kimley, you can see it does look like a downtrend. So if it's a downtrend, right, why are we buying Kimley? Mainly because the downtrend itself, you can see there's a big resting period here. And I've said just now that if I were to buy a downtrend, right, I want to at least see a lower high, meaning a lower high. A higher low, a higher low. So what I sort of feel is that this area here, this portion here, it does seems like a higher low, mainly because it has managed to break through a resistance that has lasted for an entire year, maybe entire 1.5 year lah. It sort of lasted for entire 1.5 year. So what this 1.5 year means, why does price sort of stagnant for 1.5 year and then it managed to break through? It means that for this 1.5 year, right, whoever that is stuck at the top whoever stuck here they probably have taken their loss already. They probably stop out and all the remaining people in this counter, right, they no longer want to sell, meaning the supply have dried out. There's not much supply already, which is why price now managed to move up a bit. So, and you can see that when price move up, right, there's a huge volume coming in, meaning there is huge interest from many people in this area now. So because of that, right, price will be able to move up some more. And of course, these are just an analysis on my part. Of course, it's not something that is like 100% going to happen. So please don't put your life saving in and stuff like that. Because for every trade, right, there is a stop loss. So do adhere the stop loss. But what analysis provide is that it gives you a higher probability. Instead of maybe like random or 50-50, right, maybe this trade has a 70% chance, 80% chance. So you have your higher rate of winning lah, but do adhere to your stop loss. So I believe for Kimley, right, the initial call came around here, probably around here. So I was able to get in around 2.5 like that. But of course, after I get in, it was stuck quite some time. Then recently, last week, it managed to go up some more lah. And after it hit 2.9, right, it is resting a bit. So if you look at Kimley, it is not a very chongster, if not a very fast mover. So you will expect frequent break in between. So do keep that in mind, because you don't want to enter something and then just because you enter, it is not going to shoot up the next day. It will just do what it is doing. Even when price is coming down here, right, you can see that price doesn't go like very fast and furious. It sideways, 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 sideways. It will come down in a sideways manner. It doesn't like come down straight like that. So same thing when it is going up. So if you are in Kimley, just be patient, adhere to your stop loss, and just let it be lah. Just let it sit there. The advantage about Kimley is that it is only like 25 cent, 28 cent, meaning with $5,000 you can probably get like 20 lots or 15 lots like that. So it's very cheap lah, and each price movement upward is a lot of profit percentage in terms of your total capital lah. So try not to worry too much and just leave it there. If it hit your stop loss, then you simply just take the loss. And next one, the last one is iFast. iFast. Okay, where is iFast? So of course, iFast has been a huge winner last week lah. I'm not sure if I sort of recommend this in my Facebook. I did recommend this somewhere else, but I'm not sure if I did it in the SGX Stockmaster group lah. I think you all can go and find. But for iFast, right, if you all are not in the trade, right, at the current price, it is quite hard for you to buy and then find a safe stop loss level. So my recommendation is that wait for people to take profit first. If price come back down to 2.9, right, 3.0, 2.9, 2.8, right, I will look to buy here lah. I will probably look to buy here lah. If you are not in the trade, I was in the trade somewhere around here like that. Somewhere around here like that. I bought this breakout. I bought this breakout and I'm still in the trade. So if I'm looking for the next trade, right, wait for it to come back to sort of retrace and then wait for support to form, and then you can sort of buy the support and it will go further upwards. Okay, so these are all the analysis that I have. So moving forward next week, right? There is actually a lot of counters in Singapore market to trade lah. You just have to be very open your eyes big and look at all these counters lah. And all these counters, right? You can actually go to my Patreon post. You can come to Patreon website. All these are currently made available for everyone. You don't have to subscribe anything for now. It is all public lah. So you can look at all these counters that I posted: Union Gas, Sunningdale Tech, CMNC, Aspen, SunPower, Propnex, Maple Tree Lock, Venture. All these were posted last week, and all these they probably have a high probability lah. Even Samcor Industry also looking quite good. So you can go in, look at the stop loss level, look at the entry level, and you can of course do your own diligence before taking the trade lah. I personally don't take all the trade, mainly because I don't have unlimited capital. I do pick and choose. So the one that I pick and choose was of course Aspen and Union Gas. And if I see more potential coming in next week, right, I will definitely keep posting as well. So yeah, so that's all for this particular session. Thank you all for coming, and I do hope that it is the kind of information that you all want to hear, and I will be keep doing this session every Saturday lah. Okay, so if you all have any question, you can I will upload this video, and you all can post your question once the video is uploaded on Facebook. Okay, have a good night everyone. Thank you.